Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Asian shares rise for the first time in 4 days, mirroring gains in the U.S. that put the S&P 500 on the brink of a bull market. Prime Minister Benjamin Netanyahu says Israel will take over the entire Gaza Strip and start allowing aid in again. President Trump says Russia and Ukraine will begin talks immediately on ending their war, but possibly without the U.S. Well, it has just gone 8 a.m. across the Emirates, 7 a.m. in Qatar. I'm Joanna Versace in Doha. We are here, of course, for the Qatar Economic Forum powered by Bloomberg. We have a massive week coming up. And over the next few days, we'll hear from some major global voices, including Elon Musk, Stephen Mnuchin, Donald Trump Jr., QIA CEO Mohammed Al-Suwaidi, JP Morgan's Mary Erdoes, Turkey's Finance Minister Mehmet Şimşek, and PCP Capital Partners Amanda Stavely. Those are just some of the names who will be speaking at the conference in the next few days. We have a jam-packed schedule. The next 3 days are going to be busy, so stay tuned for all of the takeaways from Qatar Economic Forum this year. Things kick off in a couple of hours. But let's go back and talk about some of the price action in markets yesterday. 24 hours ago, we were digesting the news of that Moody's sovereign credit rating downgrade for the U.S. The initial reaction was risk off, but by the end of the day yesterday, what we saw was a recovery in Wall Street. So S&P ended slightly in the green and actually on the verge of a bull market, i.e. we are almost 20% up since the lows we got to back in April. So strong recovery for the S&P. Also take a look at 10-year yield sitting at 4.45%. So we have also rebounded from some of the highs in yields that we got to yesterday as buying emerged throughout the later afternoon session in the U.S. The USD, surprisingly today, actually trading stable, slightly firmer again, so brushing off some of yesterday's price action. And then Brent also in focus as well as we talk about progress potentially on a ceasefire between Russia and Ukraine. Switching over, let's take a look at some of the Asian indices. This is the handover from the Asia Pacific markets, and you can see it's mostly green, up 0.4%. Over there, the Asian markets are trading near a 7-month high. So again, a strong recovery there too. Hang Seng also up 1.3% there, and on strong debut price action with CATL, the battery makers. So that is given a bit of a boost to the Hang Seng. And then Aussie in focus today, that's the currency. You can see we're slipping a little bit. We do have an RBA decision coming up in about half an hour's time. The expectation is that they will go for another 25 basis point rate cut, but the most recent CPI prints came in slightly hotter than expectations, which may make them slightly more cautious about the path ahead on future interest rate cuts. So we're watching out for that in our show. But let's get back to another top story. President Trump says Russia and Ukraine will begin talks immediately on ending their war after his 2-hour phone call on Monday with Vladimir Putin.
This is not a war that would have happened if I were president. This is not my war. I'm just here to try and help.
For more, let's bring in Bloomberg's Bill Ferries. Well, it's been days now, speculation as to whether Trump was going to meet with Putin. In the end, it was a phone call. What were the takeaways of that call, Bill?
Well, there are a lot of questions coming out from that phone call, as you mentioned. The 2-hour phone call between Trump and Putin ended with President Trump saying that these talks would begin immediately and that only Ukraine and Russia could really solve the issues that are dividing them right now, which immediately raised the question of whether the U.S. plans to be a part of any negotiations. There's a lot of concern in European capitals that some of the language Trump used after that call suggests that he may be getting ready to step away from involvement in the war. There's a lot of questions about what kind of concessions Russia would be expected to come to the negotiating table with. In what we've learned so far, there are no concessions that are being made. So it's really not clear what the next steps are. President Trump talked about working towards negotiating a ceasefire. There have been talks about trying to get to a ceasefire for about 2 or 3 months now. It just hasn't happened. In Europe in particular, the biggest worry is that this is going to allow Moscow to continue to string out this war, perhaps allow Russian forces to try to take more territory before there really is a cessation of the hostilities.
Bill, President Trump promised to get an end or see an end to this war in his first 100 days. That obviously didn't transpire, and he's discovering that it is very tricky to get to some form of even just to begin the ceasefire discussions between Ukraine and Russia. What is the likelihood now that President Trump simply loses interest and walks away from trying to mediate?
The doors will be closing.
I think it's a real risk. We've seen the U.S. step back since President Trump took office in terms of its willingness to supply weapons to Ukraine, its willingness to engage with European partners about how to approach Russia in a unified way. And so there is this concern that if Donald Trump hasn't been able to kind of broker this great breakthrough that he's been promising, that he's just going to wash his hands of this and basically leave it to Europe, leave it to Ukraine to sort out. And really that gives a huge advantage to Russia and its forces, which continue to grind away on the ground and continue to try to take more territory as this war gets stretched out.
Bill, and what do we understand is the Ukraine position on this? After that fractious meeting in the Oval Office, even the body language between President Zelensky and President Trump has changed. President Zelensky agreed to sign on to that critical minerals deal. They've also accepted that unconditional 30-day ceasefire. What do we know about what Ukraine may be looking to achieve if these discussions actually do go ahead between Ukraine and Russia?
Well, Ukraine hasn't given up on its priorities, which it says are the return of contested territory, its ability, at least the option of getting into NATO, and allowing NATO troops to operate on Ukrainian territory after an agreement. Those are all things that Russia has opposed from the beginning, hasn't given ground on. So it's really hard to see how you get to that. As you mentioned, Ukraine did agree to a 30-day ceasefire. I think that was more than 60 days ago now, and Russia hasn't responded except for a brief, less than 24-hour ceasefire early this month. So getting the two sides to even sit down at the same table and talk about a ceasefire has been kind of the biggest challenge. And if Russia continues to see the U.S. and its European allies kind of getting divided on this issue, I think it will see less incentive to begin talks.
Bloomberg's Bill Ferries, thank you so much for giving us an update. Now, Atlanta Fed President Raphael Bostic says he only sees one rate cut this year due to tariff-induced uncertainty.
If it takes negotiations a longer time to settle things out, we have another 90 days on China, for example, that starts to push much further into the summer, in which case we won't actually know what the true effects are going to be for several months after that. If that's how it plays out, then sure, I think, and right now I would say in my SCP I have one cut only for this year, because I think this is going to take longer to resolve than it might have otherwise.
Joining us is Satyajit Singh, head of fixed income strategy at Emirates NBD. Well, we can talk about what your expectations are for the Fed, but first I just want to start with the news of the downgrade that came through on Friday. We saw, I would say, quite a short-lived reaction yesterday in risky assets. By the end of the session, yields were basically back to where they were. They've recuperated a lot of the losses. Similar thing for equities. Is there not going to be a lasting impact on U.S. assets on the back of this sovereign credit downgrade that came through?
It is a step in the wrong direction, but in terms of immediate impact, I think it will be lower in magnitude than what happened in 2023. In 2023, when Fitch downgraded from AAA to AA+, at that point of time, within 10 days, we saw 10-year yields go up by almost 20 bips. But yesterday's reaction actually shows that market participants are not stretched in terms of their positioning. If you look at the one-year Zeta score in the JP Morgan Treasury Client Survey, that's more or less normal. So I think this time, because it was expected for a long time, the impact would remain muted compared to the last episodes.
And yet, it's brought to light, again, conversations around the outstanding debt pile in the U.S., the servicing costs, the size of the budget deficit as we head into crucial talks about the extension of those tax cuts. Is it likely that investors are going to continue to ask and demand for a higher premium in the U.S. fixed income curve to reflect some of those concerns?
Completely agree with you again. In terms of structurally, the term premium we think has increased for US. And if you compare US with similar rated and against their maturity matched YS term premium, it actually trades at more discount compared to their other counterparts with similarly rated peers. So yes, investors are going to demand more term premium for the longer end of the treasury curve. However, we think that any unruly increase in the yields would lead to some kind of Fed intervention, probably in terms of cutting down their QT. So for us, 4.8% is kind of the threshold where we see some kind of intervention coming into the market. So anything above 4.5% 10-year yield looks interesting for us.
What do you think is fair value for 10-year yields here, given everything that's going on?
So we started this year with a fair value estimate of 4.3% after the recent tariff discussions after Liberation Day. We expect inflation to stay high, while the growth might suffer in the second half. But we think 4.3% is a pretty decent estimate of our fair value for the 10-year yield. And we expect it to range somewhere between 4% to, let's say, 4.8% on the upside.
Turning it to the Middle East region, there's been a flurry of bond issuance just the last couple of weeks. I think the worst of the volatility of April seems to be behind us. How has investor demand been for that paper, and where are you seeing pockets of opportunity?
I think investors in the Middle East have a huge demand for the bonds and sukuks that are being issued from this region, because a lot of issuers that have come to the region are IG-rated issuers, which have gone down in capital structure. We are seeing a lot of tier 1 issuances. We are seeing a couple of high-yield real estate issuers also. Most of the times we have seen order book coverage somewhere in the 3 to 4x kind of ratio. So that means the demand remains strong. Even in the secondary market, we have seen those bonds and sukuks perform very well, actually. So I'm not overly worried about the credit situation from this region. And in terms of opportunity, we believe subordinated debt of strong banks are a good bet. Also, in terms of high yield, I think government-related entities which trade somewhere between 25 to 50 bips over the sovereign-rated curve, they are brilliant opportunities to invest in.
Has there been a repricing of credit, some of the credit in the region, on back of also not just global uncertainties, but lower oil prices as well? Did that show up?
We have seen long-dated curve of Bahrain, Egypt, and Oman spreads widen a little bit between 2nd April to 11th April. But after that, things have actually quietened down. In fact, most of the CDS spreads, most of the OAS spreads have actually compressed since then. The high-yield Bloomberg Barclays high-yield index spreads have also come down by almost 100 bips. And that's why we took profit on our overweight high-yield call. It was very successful. So yes, there has been repricing, but I think we are back to the pre-liberation levels.
Satyajit, always good to talk to you. Thank you so much for coming on our show. Satyajit Singh, head of fixed income strategy at Emirates NBD. Now, Israel says it is planning to take over Gaza as the military announces an unprecedented attack on Hamas. We have the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Doha at the Qatar Economic Forum, hence all of the background noise you can hear today. Prime Minister Benjamin Netanyahu says Israel will take over the entire Gaza Strip as the military announced it would carry out what it describes as an unprecedented attack on Hamas. Netanyahu also says Israel will start allowing aid into Gaza again after stopping it in early March in a bid to make Hamas release hostages and surrender. Joining us now is Paul Wallace, who leads Bloomberg's MENA economy and government coverage. What do we know about the latest ground operations that Israel have announced? And the Israeli Prime Minister gave a speech yesterday saying that they are going to be pushing in to the Gaza Strip. What do we know about what they're trying to achieve?
So the IDF has already stepped up those operations. In the last 2 weeks, it's called up tens of thousands of reservists just for this moment, and effectively said it would come to this if Hamas didn't surrender and agreed to release the rest of the hostages that are still remaining, the 58 hostages that are still there. What Israel is doing at the same time as stepping up operations is allowing aid into Gaza for the first time since early March. There was a trickle of trucks yesterday, if you like. The UN said it was a drop in the ocean. But what we're seeing is increased pressure on Israel, including from the US, to prevent a famine or something akin to that in Gaza.
It seems as though right now a lot of the attention on the mediation talks has shifted to the humanitarian crisis in Gaza because, as you mentioned, it's been almost 3 months since aid has gone into the enclave. About 1/5 of the population are in a state of extreme starvation. Even 2/3 of the population are in a state of famine or close to it. So has there been a shift in terms of what mediators are trying to achieve, and the first order priority now really being about getting humanitarian aid and assistance into the enclave before thinking about ceasefire discussions again?
I think for a lot of countries, for the US and for European countries, right now the priority is the humanitarian situation and getting aid into the country. There's still huge pressure in Israel on Netanyahu not to allow it in, and yesterday he was almost defending himself for allowing aid in by saying it wasn't his choice, it was the IDF's call, and some ministers were also saying that if they didn't do this, the international pressure would amount massively. Israel still says the food situation, while getting worse in Gaza, isn't that bad. All the evidence from the likes of the UN and other international aid organizations say that's not the case, that already the situation regarding food and medicines is dire, and I think that's why you've seen this sort of renewed international push in recent days to make Israel end this aid blockade.
Do we understand from our own reporting whether the U.S. are actually putting any pressure on Israel, not just on the humanitarian side of things, but with these military operations?
The U.S. is certainly involved very much still with the mediation efforts over the hostages, and yes, it seems like pressure in the background on Israel from the U.S. is mounting, and whilst the U.S. is still giving Israel full support, it's pretty clear that Donald Trump and his administration do not want any kind of famine situation in Gaza. They've said that publicly. They've told Israel it must not happen, and one of the reasons aid trucks started to go in yesterday, albeit on a very small scale, was because of pressure from Washington.
Paul, thank you so much. Paul Wallace, who leads our MENA economy and government coverage. Thank you. And later today, I will be speaking to the Qatari Prime Minister, Sheikh Mohammed bin Abdulrahman bin Al Thani, the CEO of the Sovereign Wealth Fund, QIA, Mohammed Saif al-Suwaidi, and Morgan Ortagus, the U.S. Deputy Special Presidential Envoy to the Middle East. And coming up, Israel says it is planning to take over Gaza completely, as we were just talking about. Control Risk joins us at 8:40 a.m. Dubai time for more on what this means for the region and beyond. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Doha. Now for a look at some of the other stories we're following this morning. NVIDIA and Abu Dhabi investment vehicle MGX are partnering with French firms to establish a data center campus near Paris. The goal is to build an AI campus that they say will be Europe's largest, with a capacity of 1.4 gigawatts. The deal combines the UAE's desire to diversify its economy and extend its political influence with French efforts to develop so-called AI sovereignty in Europe. The White House says the U.S. Air Force will accept the controversial donation of a plane from the government of Qatar. Press Secretary Caroline Leavitt says the Boeing aircraft will be retrofitted to the highest standards for use as a presidential jet. She says the plane is not a personal donation or a gift. Saudi Arabia's sovereign wealth fund is opening a subsidiary office in Paris. That says the PIF seeks to deepen ties with France and double investment in Europe by 2030. The expansion adds to global offices in New York, London, Hong Kong, and Beijing. The announcement follows comments over the weekend from PIF Governor Yasser Al-Rumayyan that the fund plans to grow its European investments and procurements to $170 billion by the start of the next decade. And let's do a recap of how some of these markets are trading, because we saw a recovery for risky assets yesterday after the downgrade came through. We opened up in the red, but by the end of the session, Wall Street was up in the green. S&P now almost up 20% since the lows it got to back in April. But take a look at futures today. You've got S&P futures down about 0.3%, NASDAQ down about 0.5%. So again, a negative session looks like it's going to be, but there's a bit of a theme going on here. In Asian session, these markets seem to be pointing negative from international players. And then once U.S. markets come in, we do start seeing a recovery. So that theme may actually be sticking. But then take a look at European markets, seen opening up in the green, up 0.5%. And this potentially on back of that call between President Trump and President Putin, with the latter suggesting that they may be considering direct discussions with Ukraine over a ceasefire. Coming up, we are going to be discussing the global outlook with Aminu Umar-Sadiq, Managing Director and CEO of the Nigeria Sovereign Investment Authority. And of course, lots of questions about how some of these official accounts are thinking about U.S. assets here and bigger themes, opportunities over the next decade. All of that coming up next. We're live at the Qatar Economic Forum in Doha. This is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Asian shares rise for the first time in 4 days, mirroring gains in the U.S. that put the S&P 500 on the brink of a bull market. Prime Minister Benjamin Netanyahu says Israel will take over the entire Gaza Strip and start allowing aid in again. President Trump says Russia and Ukraine will begin talks immediately on ending their war, but possibly without the U.S. It has just gone 8:30 a.m. across the Emirates, 7:30 a.m. here in Qatar. I'm Jumana Bersachi in Doha for Qatar Economic Forum. It all kicks off shortly in a couple of hours' time. We're here for the next 3 days. But first, let me just bring you some of the breaking news out of the RBA. As expected, they cut the interest rate by 25 basis points to 3.85%. So that was in line with the estimates. The commentary is interesting. They're saying inflation has fallen substantially. They also cite considerable uncertainty about the final scope of tariffs. So that's a theme that we get not just from central banks, but from many institutional accounts from around the world talking about that. Global uncertainty contributes to weaker Australia outlook. The board will be attentive to data and assessment of risk. So cutting interest rates in line with the expectations. A positive signal, though, on the Australian economy, saying that private domestic demand appears to have been recovering. We will do what is needed to achieve policy goals. So that is from the RBA just now, and you can see that the instant reaction for the currency was a dip weaker. So we are about 0.4 of a weaker now versus the USD. And then 2-year yields and 10-year yields, 3-year yields and 10-year yields are about 5 basis points lower. So cutting interest rates by 25 basis points and slightly dovish language as well. Moving beyond that, let's take a look at other markets because what we're seeing is a bit of red on the screen now for some of these S&P futures. Those markets are leaning towards the red. As you can see, down 0.3% despite the recovery that we had in risky assets yesterday. 10-year yields also recovering. At one point, we pierced through 4.5%. We're back to 4.45 now as investors look past that sovereign rating downgrade that came through from Moody's, but also attention now turning to that tax cut bill that is going through the House in the next couple of days. USD trading sideways today, and then Brent also sitting at around $65, so stabilizing here. As for Asian markets, the Asia Pacific MSCI is getting close to 7 months highs, so we've recovered and come a long way since where we were about back in the middle of April, I should say. Hang Seng up 1.3%. CATL, the battery maker that provides some of the batteries to Tesla, is up 1.3%. So that gave the Hang Seng is up 1.3%, but very strong debut out of CATL, I should say. And then Aussie, we just spoke about it now, down 0.4%. Right, Nigeria's policymakers look set to keep rates steady for a second straight meeting today, following last week's cooler inflation print. This is the second rate review for the year. The central bank decided to reduce the frequency of meetings in February, signaling it had inflation under control. For more, Bloomberg's Andiro Ganga joins us now. Andiro, why are economists expecting the central bank to keep rates steady in Nigeria?
Hi, Juman. It all boils down to inflation. In March, we saw inflation surprisingly rising, but in April, we've begun seeing that downward trajectory. And the central bank will be hoping that this continues. We've seen lower gasoline prices, lower food prices, and this has offset the slump we saw in the naira. This is a currency that has had a really strong run against the dollar up until April, when it lost 4% against the dollar. And this is because of the volatility of oil prices in the international market. Now, the central bank has really worked very hard on this currency, and it doesn't want exogenous factors to offset the gains they've made. So they sold some dollars, and this was able to abate further depreciation. But this is a country that was hoping to produce 2 million barrels per day and pegged oil at $75 per barrel. Currently, they're doing 1.4 million barrels per day, and prices in the international market are far softer than they were anticipating. So weaker prices mean lower earnings, and this could affect the currency. So that is why we are seeing the central bank insisting that they will continue with their orthodox policy until inflation is anchored, then rates will follow.
Yeah, you say that the central bank will continue with the orthodox policy, but is it safe to assume that the tightening cycle has actually come to an end?
Jumana, cautious optimism. Angola, Zambia, Ghana are likely to hold. Angola will be monitoring the impact of volatile oil prices in the international market on their own economy. Then you have Ghana and Zambia that have had both their currencies perform very well against the dollar, so they might consider that in holding. And then you have countries like Mozambique who will begin the cut because their inflation is low. You also have South Africa expected to cut by 25 basis points. Trade is being boosted by higher earnings from gold, and also lower oil prices is helping their currency, which has gained 2% against the dollar. So while there are few outliers that are likely to cut, we give it until the second half of the year, disinflation begins, then the rest of the continent will follow in cutting.
Excellent overview of what some of the key central banks have been doing, and also the Nigeria Central Bank, Bloomberg's Andiro Ganga in Kigali, Rwanda. Well, joining us now is Aminu Umar-Sadiq, Managing Director and CEO at Nigeria's Sovereign Investment Authority, and Jennifer Zabazaja, our Chief Africa Correspondent, joins me around set as well. I actually just want to pick up on something that our colleague Andiro was just pointing to, which is the fact that Nigeria's oil production has not met targets or objectives in an environment of lower oil prices as well. How is that affecting your own investment decisions and the inflows that are coming into the fund?
Thank you very much. It's a great pleasure being here. The Nigeria Sovereign Investment Authority is Nigeria's sovereign wealth fund. By law, we have 3 separate and ring-fence funds. A stabilization fund that offers stabilization support during times of economic duress. We have a future generations fund that's a long-term fund. And then we have a domestic infrastructure fund. Now, within the context of the Petroleum Industry Act of Nigeria, we have a royalty by price that actually allows asset under management augmentation, particularly in instances where the oil price is $50 and above. And so, of course, as the oil price goes up and down, that actually affects the amount of inflows that come into NSIA that actually give us the recourse to invest.
So then what does that mean for the outlook moving forward for NSIA? Do you focus on other assets potentially? Do you look to gold? Do you look to, where else are you focusing then?
So on the Future Generations Fund side, at the end of last year, actually, clearly valuation levels were high, and so we pivoted to cash. And that allowed us to do a couple of things at the beginning of this year. The first thing was we decided to pivot away from alternatives into defensive assets, particularly growth assets, as well as investment-grade corporate bonds. The second thing that we did was actually for our long-only portfolio, our long-only developed markets portfolio, we also decided to pivot away from the US to Japan, to Australia, and to Europe. And then finally, what we decided to do was to rationalize our assets allocation to see how we could consolidate the number of names that we had into fewer, higher quality stocks.
Did the pivot away from the U.S. happen prior to this new administration coming in? What was the thinking behind that?
Just the diversification play. It was important, given where we saw the markets, how buoyant the market was, that we began to look elsewhere, just to ensure that we had a more robust portfolio. We had no political considerations, so to speak. And then on the infrastructure side, I think we're looking at a number of large-scale transactions. I think the first thing that we're doing was around healthcare, particularly around oncology. You may have heard the NSIA co-founded a company called MedServ that focuses on oncology, on diagnostics, and on cath labs, and we are expanding that significantly. The second thing that we're doing is off the back of Mission 300, the proposition that both the World Bank and the AFDB co-founded, the NSIA Africa 50 Sustainable Energy for All are also putting together a $500 million distributed renewable energy platform. And then finally, what we're also doing alongside OCP of Morocco is to build a petrochemicals platform, starting off with ammonia, to see how we can backward integrate towards the production of fertilizers in Nigeria.
In lots of different asset classes. Let me just ask you about your long-term thesis about the U.S., just to pick up on what Jen was asking you now. We hear that some official accounts overseas are worried about the trajectory of U.S. when you think about the fiscal dynamics. The dollar has been heavily sold for the first few months of this year. Questions about really where policy is headed from here. How do you think about the investment opportunity in the U.S. with so much policy uncertainty right now?
Thank you. Very good question. I think as a sovereign wealth fund, we manage monies for future generations of Nigerians. So we take a 25 to 30-year-old view. The U.S. is the U.S. It is exceptional. It has the largest companies. It is focused on institutional. So irrespective of whatever is happening today, in the next 10, 15, 20 years, I think it goes without saying that the U.S. will be in play. And so as a sovereign wealth fund, we will always retain that exposure, not only to developed markets, but to the U.S. itself.
Well, and Aminu, you were just talking about how a number of African sovereign wealth funds are going to be coming together in just a few weeks in Abuja, you were mentioning. Is there a focus then on potentially local debt markets as opposed to looking international? Do you think African sovereign wealth funds are positioned to find that capital on the continent?
I think that's an excellent question. I think when you look at the size of our local pension funds relative to our infrastructure deficits, that is the kind of capital that we need to be looking to mobilize towards infrastructure financing. And I think we can do more as multilaterals within the continent, as sovereign wealth funds within the continent, to begin to find ways to actually enhance bankable propositions and find ways to give comfort to conservative capital, particularly the pension funds, to actually finance our infrastructure projects. On the 16th, alongside other African sovereign wealth funds, we will be hosting the Africa Sovereign Investment Forum in Abuja, and that will be the main theme of discussions at that point.
What's your target then for the end of the year?
In terms of
financing and mobilizing capital?
We're looking at a minimum of $1.5 to $2 billion as a start. And we are hopeful that a combination of all 15 of us will get there.
Aminu, very good to have you on our show. Thank you so much for joining us. Really interesting to hear your perspectives. Aminu Umar-Sadiq, Managing Director and CEO at Nigeria's Sovereign Investment Authority, and Jennifer Sabasaja herself in person. Thank you. All right, coming up, Israel says it's planning to take over Gaza completely. Control Risks joins us next for more on what this means for the region and beyond. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersechi in Doha. Israel says it will take over the entire Gaza Strip as Prime Minister Benjamin Netanyahu says the military would carry out what is being described as an unprecedented attack on Hamas. Meanwhile, Israel says the first humanitarian aid trucks have entered Gaza after nearly 3 months of total blockade. Joining me now is Sorana Parvulescu, a partner EMEA at Control Risks. Good to have you with us in Qatar Economic Forum. Unfortunately, the news over the last 24 hours hasn't been good with the intensification once again of the ground operations in Israel. What do you think that the purpose is of this latest offensive? Is it that Israel wants to put pressure on Hamas to release the remaining hostages, or is the objective really to fully take over the Gaza Strip?
Our take is that Israel doesn't really have a high intent to have a ceasefire. The intent is really to take control of Gaza as much as possible, and Netanyahu wants to please his coalition partners, and sort of ultimately this is his end objective rather than a ceasefire. I don't think the ceasefire is very much in their calculations right now.
President Trump was in the region last week and he met with Gulf states, including Qatar. I will be speaking to the Qatar PM later this morning, but he seems to have listened more to the leaders of the Gulf, especially when it came to Syria with the surprise announcement that the U.S. are looking to remove sanctions. Do you think there is scope for Gulf leaders to persuade or influence the Trump administration's decision-making on trying to stop the bloodshed in Gaza?
I think definitely President Trump has definitely shown, as you say, a willingness to listen and to engage with the Gulf countries on a very different basis than we've been used to in the previous administration. But I also think ultimately they actually agree on ending at least the humanitarian crisis and on a ceasefire. I think both the U.S. at this point is pretty clear. Both the U.S. and the Gulf countries are pressing for a ceasefire, for humanitarian aid, and a ceasefire probably that could be sustainable or built onto a more permanent solution. The party that isn't really interested in that option seems to be Israel.
Yeah, President Trump talked about the birth of a new Middle East. He talked about the economic transformation in many Gulf countries, about giving countries like Syria a chance for real prosperity, let them have a chance, he said. The similar thing for Lebanon. Can the region prosper in the absence of a solution for the Palestinian-Israeli conflict, which has been going on for decades now?
That's a big if, to be honest. Probably not. I think as long as Israel will have very different stated intentions in terms of regional geopolitics than the rest of the region, we're not going to have a sort of happy, peaceful region anytime soon. There is, though, it is unprecedented, though, that you now have the Gulf states with the U.S. and to some extent also keeping Iran on the side, trying to put pressure and create some of these conditions, which we didn't really have for a very long time in the region.
You brought up Iran. What do you think will end up happening with the U.S.-Iran nuclear discussions? Just over the weekend, we heard comments from the deputy foreign minister saying that 0% enrichment is a non-starter for them.
Yeah, I think it's normal to see this trading of sort of posturing and so on in the midst of negotiation. Also because the U.S. positions changed a few times and it's not quite clear what they'll be agreeing to in the end. We do think out of all the conflicts and the issues that we have, the President Trump has on the table, U.S.-Iran might actually have the better chances, even if it's a relatively shallow deal. We could see some form of a deal of less for less that would at least bring one of these tensions a notch down and present a win for President Trump.
I just wonder whether if there is a U.S.-Iran deal, one of the conditions of that deal would be for Iran to stop funding the proxies that have been operating through the region. If there is a deal, should that not invariably lead to a lower temperature in the region as well?
So the view's always been that that'll be the ideal deal, but the reality and the history has shown us that that's a very unlikely possibility. It's a very tall ask to think that Iran will give away both impeachment and sort of proxy support. And also, how do you make Iran actually really do that, and how do you comply with that, right? So while all the countries in the region would very much like that, and that was the issue with the JCPOA last time around, if you remember, the reality is that a more realistic deal is something that focuses only on nuclear to start with and is seen as a sort of building steps towards more engagement and maybe more negotiations later down the line.
Yeah. Do you sense that there's a rift, so to speak, between the Israeli government and the U.S. administration? Lots of people were pointing out that President Trump didn't stop by Israel when he was in the region. There's a report overnight suggesting that J.D. Vance was considering it. He changed his mind after the latest ground offensive. Do you think there's real daylight between the two?
I think it's become apparent, and probably President Trump, it looks like he's lost some patience with Israel, or at least that's how he's behaving. And there were very clear signals in the way that he's not really mentioned Israel or talks about Israel or visited Israel on the trip, but also the release of the U.S.-Israeli hostage without involving Israel, the deal with Houthis. There's been the discussions with Iran. Israel's been shut out of a lot of conversations, and I think that shows some displeasement in the U.S. administration with what they're trying to achieve. But also the U.S. administration is probably seeing an internal debate between the more hawkish pro-Israeli parts of the government and the ones that are more willing to let go and sort of get a deal quicker.
Sorana, really good to talk to you here at Qatar Economic Forum. Sorana Parvulescu, EMEA partner at Control Risks. And a reminder, I will be speaking later to the Qatari Prime Minister, Sheikh Mohammed bin Abdulrahman bin Al Thani, the CEO of the Sovereign Wealth Fund, QIA, Mohammed Saif al-Suwaidi, and Morgan Ortagus, the U.S. Deputy Special Presidential Envoy to the Middle East. Those conversations ahead here at the Qatar Economic Forum. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Doha. Now for a look at some of the other stories we're following today. Dubai Holding has boosted the size of the initial public offering of its residential real estate investment trust. The REIT is seeking to raise as much as $584 million amid strong demand from domestic and international investors. The deal is expected to price at 1.1 dirhams per unit, the top end of the range, and is significantly oversubscribed on the upsized amount. The strong investor appetite reflects the continued boom in Dubai's property market. Prices in the city have risen more than 70% over the last 4 years. CATL rose in its Hong Kong trading debut after the Chinese battery giant wrapped up the world's biggest listing this year by raising $4.6 billion. The blockbuster debut comes despite being blacklisted by the Pentagon and grinding through geopolitical storms. Investors' allure of buying into a blue-chip stock at the forefront of electric vehicle technology seems to have outweighed the risks of getting caught up in the ongoing turbulence in U.S.-China relations. And a look at markets, a recovery for the S&P. We've actually rebounded almost 20% since those April lows, so a bullish streak going on for the U.S. indices, even though today we are seeing turning south. S&P futures down about 0.3%. European markets, though, look to be opening up in the green, up 0.5%, perhaps after that call that took place between President Trump and Putin and the possibility of direct discussions between Ukraine and Russia. We also saw a recovery in U.S. Treasuries yesterday as well, despite the downgrade that came through. Now, later today, I will be speaking to the Qatari Prime Minister, Sheikh Mohammed bin Abdulrahman bin Al Thani, the CEO of the Sovereign Wealth Fund, QIA, Mohammed Saif al-Suwaidi, and Morgan Ortagus, the U.S.'s Deputy Special Presidential Envoy to the Middle East. We are live at the Qatar Economic Forum. Also, do not miss out. Later today, our colleague Michelle Hussein will be having a conversation with Elon Musk. So tune into that. It's all happening in the next few hours. That's Horizons Middle East and Africa. I'm Jumana Versace in Doha.